All right. So, we love to go deep here. And the stuff you sent us, well, this is a pretty huge story unfolding right now.
Yeah.
And I think it's something that a lot of people are trying to wrap their heads around. And that is basically, you know, states getting into the crypto game.
States and crypto, that's right.
Yeah. And I mean, this isn't just like, dabbling their toes in the water. This is like full on, diving in head first.
Yeah, definitely. We're talking reserves, broader integration, and a whole lot more.
Yeah. And, I think it's easy to get lost in the weaves with all this stuff. Like there's so much happening so fast. So that's what we're here to do, is to kind of, take your sources and really dig in and try to extract those really key insights for you.
Absolutely. And, whether you're dealing with this at work just super curious or somewhere in between it, our goal is to really help you understand this without, becoming too overwhelming.
Right, exactly. Because I think there's a sense of like, wait, what's going on? Like it feels like this whole thing just kind of exploded.
It kind of did, yeah.
Yeah.
And the sources you provided really highlight that. So, yeah, we need to break it down.
Yeah. Okay. So let's start with the basics. When we talk about states and crypto, what are we really talking about here?
Well, we're primarily talking about how American states are starting to explore and actually put into action different strategies when it comes to cryptocurrency. And the main focus is on Bitcoin reserves.
Okay. Bitcoin reserve. So that's like states actually holding Bitcoin as part of their, state funds.
Exactly. And your sources dig into, what's driving this, what different approaches they're using, and what the broader impact could be. So we'll get into all of that.
Okay, cool. So to kind of understand how we got here, I think we need to rewind a bit, go back to late 2024 to what one of your sources, because the crypto spark.
Ah, yes, Ohio.
Yeah, Ohio's Strategic Bitcoin Reserve Bill. So tell us a little bit about that. Like, what was Ohio trying to do?
Yeah. So late 2024, they introduced this Senate Bill 57. And it wasn't just, some vague idea about crypto. It was a pretty specific piece of legislation that basically said, hey, the state treasurer could actually invest interim state funds in Bitcoin.
Okay, so like actual state money going into Bitcoin. Interesting.
Right. And there were some key parts to it. Like
Yeah.
they wanted to hold it for at least 5 years.
Yeah.
So that kind of shows they were thinking long term, not just trying to, make a quick profit.
Right, not just like day trading with state funds.
Yeah. And they were really serious about keeping that Bitcoin safe.
Hmm.
The whole security and custody aspect was a big deal.
Which makes sense, right? You don't want to be, the state that loses millions in Bitcoin because of a hack or something.
Exactly. So that really signals a shift. Like states are maybe starting to see digital assets as a more foundational part of their financial future, and not just something to speculate on.
I see. So it's more about like a long-term strategy rather than just trying to ride the crypto wave.
Bec-
Okay, so we see Ohio kind of putting their stake in the ground, but what was the thinking behind it? Like, why did they do this? What were they hoping to achieve?
Well, politically, it seemed pretty clear. The legislature, there's Republican controlled, and they saw Bitcoin as a way to hedge against inflation, diversify their reserves beyond just the usual stuff, and also kind of a way to attract those blockchain businesses, the ones using that tech for different applications.
So trying to be a little bit ahead of the curve, attract some innovation, make Ohio a bit of a hub for that kind of thing.
Yeah, exactly. And economically, the big idea was, Bitcoin is a way to preserve wealth because there are these ongoing concerns about, traditional currencies being under pressure. So the thinking was Bitcoin, with its limited supply and decentralized nature, might be a more stable store of value in the long run.
Makes sense. So kind of like a future-proofing move for the state's finances.
Yeah, you could say that.
Okay, so Ohio makes this bold move.
Mm-hmm.
What's the reaction? Like, do people think they're crazy? Are they applauded? Like, what happens?
Yeah, well, this is really interesting because the initial reactions were really all over the place. Financial experts, some were like, hey, this is innovative, this is thinking ahead. But others were worried about Bitcoin being so volatile. And, it hasn't been around as long as traditional assets.
Yeah. That price going up and down all the time can be a bit scary, especially when you're dealing with state funds.
For sure. And then the crypto community, well, they were pretty excited about it, as you can imagine.
Yeah, I bet they were like, finally someone's getting it.
Right. They saw it as a big step towards, crypto going mainstream and hoped it would inspire other states to follow suit.
And did it?
Well, early 2025, we start to see some other states joining the conversation. And it seems like that hope for a domino effect wasn't totally off base.
Okay, so who else jumps in? What are we looking at?
Well, Pennsylvania, for one, they put forward their own Bitcoin reserve bill. But theirs was a little different. They suggested this dynamic investment strategy where they try to actually, play the market fluctuations instead of just holding a set amount.
Oh, so a little bit more active management, trying to maybe time the market a bit.
Exactly. And then you have Florida Governor DeSantis. He comes out strong, advocating for a hefty 1% of the state's surplus to go into Bitcoin.
Wow, 1%, that's a pretty big chunk.
Yeah, that would instantly made them a major player in state-level Bitcoin holdings.
Yeah. Florida going big, not a surprise, I guess.
Not really. But then Texas comes in, and their approach was even more interesting because it was the most comprehensive of all the states we're talking about.
Okay, how so?
Well, they weren't just thinking about a reserve. They were talking about integrating Bitcoin into the whole state economy, like accepting tax payments in crypto, giving incentives to blockchain startups to set up shop in Texas, and they were very clear about wanting to be the Bitcoin capital of the U.S.
Wow. Okay, so really going all in on this.
Yeah, and to really underline that commitment, they announced in January 2025 that they were planning to buy $500 million worth of Bitcoin every year.
500 million a year, that's a serious statement.
Yeah, it really is. And then you have Wyoming. They've been kind of in the crypto space for a while already, and they saw this as a chance to solidify that crypto-friendly reputation.
Right, they already had that image, so they're like, we're doubling down.
Yeah, their proposal included a Bitcoin reserve, but also this thing called a regulatory sandbox. Basically, a space where they could encourage crypto innovation without, all the usual regulatory hurdles.
So kind of a testing ground for new crypto ideas.
Exactly. They wanted to attract those blockchain entrepreneurs by giving them a welcoming environment and, showing them that Wyoming was serious about Bitcoin.
Okay, so we've got all these different approaches, different motivations, but one thing's closest to play. States are starting to take this crypto thing pretty seriously.
Yeah, and it's not just about holding it as an asset.
Yeah.
Some states are looking at how to actually use it, like Louisiana.
Right. Louisiana, they went a slightly different route, right? They were more about integrating crypto into their systems.
Yeah, Louisiana was really interesting. They said, hey, we're going to accept crypto for a whole bunch of government services. And we're talking Bitcoin, Bitcoin Lightning, even USD coin.
Okay, so people could actually pay their taxes or fees with crypto.
Exactly. Things like registering your car, applying for business licenses, paying property taxes, even fees for state parks. It was a pretty wide range.
Wow, that's pretty extensive. I mean, that's not just like a little experiment. That's like integrating it into the day-to-day running of the state.
Yeah, and it wasn't just about, being trendy or whatever. They had to really invest in their cybersecurity and train their staff to handle these new payment methods securely.
Right, you can't just flip a switch and suddenly start accepting Bitcoin for everything.
Exactly. And they saw some big potential benefits, like they thought it could increase state revenue by bringing in people from the crypto economy. They thought it could make things more efficient with faster and cheaper transactions, and also kind of a way to connect with those younger, more tech-savvy citizens.
So kind of like modernizing the way the state interacts with its people.
Yeah, and not just convenience either, potentially lowering costs in the long run by, cutting out those traditional middlemen.
Interesting. So while some states were focusing on holding crypto as an asset, Louisiana was thinking about it as like a functional part of the state's financial system.
Exactly.
Okay, now back to the Midwest. January 2025, Ohio's bill is moving forward, but there's a new player entering the game.
You got it. And Indiana decides to explore Bitcoin reserves too, and their approach seemed a bit more cautious. They were talking about a gradual accumulation strategy, which kind of created this, friendly competition with Ohio.
So a little bit of keeping up with the Joneses, but with Bitcoin.
Yeah, exactly. And it added to the momentum with both states refining their proposals. And then you had other Midwestern states like Illinois and Michigan starting to pay attention too.
So that Midwestern region was becoming a bit of a hotbed for this whole crypto reserve idea.
Yeah, for sure. And the big questions everywhere were, how to keep those digital assets safe, how to handle the price swings, and how much of the state's money should actually go into crypto.
Right. Those are the big concerns. Security, volatility, and, not putting all your eggs in one basket.
Exactly.
Now, we talked about Florida's initial move, but they didn't stop there early 2025. They come out with an even bigger plan.
Yeah, Florida really made headlines with this proposal to invest a whopping $1.5 billion in Bitcoin.
1.5 billion. That's just mind-boggling.
Yeah, it was totally unprecedented and showed just how much Governor DeSantis was backing this whole thing. They did talk about ways to mitigate the risk, though, like phasing in the investment and setting up an oversight committee to manage it all.
Okay, so they were aware of the risks involved, but still willing to go big.
Yeah, and it wasn't just about having Bitcoin on their book. Their goal was to really integrate blockchain into Florida's whole financial system. And you could see the immediate effects Tech startups and crypto companies started moving there. Real estate in places like Miami got a boost. They even started talking about using their Bitcoin for international investments and maybe even issuing Bitcoin-backed bonds.
So they were thinking about all these different ways to leverage their Bitcoin holdings.
Yeah, and universities in Florida started setting up blockchain research centers, recognizing that they needed people with expertise in this area.
So it seems like they were trying to create a whole ecosystem around crypto, not just be a state that owns some Bitcoin.
Yeah, exactly. That was the vision.
Now, New Hampshire, they had a different approach. They went with this percentage-based model. Tell us about that.
Yeah, New Hampshire, with their live free or die spirit, they decided to allow up to 5% of state funds to be invested in Bitcoin. And what's interesting is it got support from both sides of the aisle, though there was still debate about, balancing innovation with being fiscally responsible.
Right, you don't want to be reckless with public funds.
Exactly. And the final bill included some specific security measures, and they wanted everything to be transparent, publicly reported so people can see what was going on.
Okay, so a bit more of a measured approach, maybe.
Yeah. And they hoped it would attract blockchain businesses and maybe lead to tax cuts if their Bitcoin went up in value. But they also had that 5% cap and a plan for what to do if the market crashed. Way to get out if things went south.
So they were trying to manage the risk while still participating in this whole crypto thing?
Exactly. It's a different model compared to like Florida or Texas, more adaptable to changing market conditions.
Okay, so by March 2025, this is no longer just a few states experimenting. This has become a real nationwide movement.
Yeah, by March 2025, 18 states were actively looking at or already doing something with cryptocurrency reserves. Is pretty remarkable.
18 states, that's a lot of momentum.
Yeah, and while most were focused on Bitcoin, some states like Florida and Texas were also considering other cryptocurrencies like Ethereum. And across all these initiatives, there was this common belief that blockchain technology was going to be a game changer.
So it wasn't just about one specific cryptocurrency, it was about the underlying technology and its potential.
Exactly. And even though they were all kind of on the same page about that, the reasons they were doing it were still pretty varied.
Yes.
Hedging against inflation, attracting tech companies, that interstate competition was still there.
So a mix of motivations, but with this underlying sense that this crypto thing is something they need to be a part of.
Yeah, and by this point, it was becoming clear that this could have a huge impact on the economy, both good and bad. The potential for growth was there, but so was the risk from those volatile crypto prices, and the regulations were still being figured out.
Right. It's still a pretty new and unpredictable landscape.
For sure.
Now, of course, we can't talk about all this without mentioning the federal government, because what they do or don't do can really affect what's happening at the state level. So what was the situation federally around this time?
Well, the sources suggest that things might have been shifting a bit on the federal level.
Mhm.
The SEC dropping that case against Coinbase. A lot of people saw that as a sign that the feds were maybe becoming more open to the crypto industry.
So maybe a little less adversarial, a little more willing to let things play out.
Yeah, and then you had more and more people in Congress supporting crypto. They even started having hearings about the potential benefits of blockchain technology.
Yeah.
So all that probably made states feel a little more confident about pursuing their own crypto plans.
Right, like maybe the feds weren't going to come down hard on them for doing this.
Exactly. But of course, the possibility of some big federal crypto law coming down the pike was still there. And that could have changed everything.
Right, that's always the wild card.
Totally. Now, with all this activity at the state level, you started to hear this talk about certain states and cities trying to become the main hubs for all things crypto and blockchain. The crypto capitals.
Yeah, like the Silicon Valley of crypto.
Exactly. And there were some clear contenders. Texas with all its energy resources, which is a big deal for Bitcoin mining, and their ambitious reserve plans. They were definitely putting themselves out there.
Yeah, Texas seems to be going all in on this.
Yeah. And then Miami, they already had a pretty vibrant crypto scene with that big Bitcoin conference every year, so they were a natural contender. And then you have Wyoming, which was ahead of the game with those crypto-friendly laws, especially for DAOs.
So a real mix of strengths and strategies.
For sure. And for the places that do manage to become those crypto capitals, the potential benefits are huge. Lots of new jobs, more tax revenue, whole new industries springing up. But it's not easy. They need to have the right infrastructure, like enough energy, reliable internet, and a workforce with the right skills.
Yeah, it's not just about being crypto friendly. You need the whole package.
Exactly. And then there's the regulation question. Finding that balance between providing security and clarity for businesses, but not stifling innovation. And of course, you can't ignore the bigger societal impacts, things like economic inequality and the digital divide, those need to be addressed too.
Right. It's not just about the tech and the money, it's about how it affects everyone. Okay, so we've got this competition heating up states, trying to become crypto hubs. But what about the bigger picture? What's the impact of all this on the U.S. economy as a whole?
Well, it has the potential to be a total game changer. I mean, you have all these states competing to attract the crypto industry. It's like a digital gold rush, and it's pushing them to be innovative, like Wyoming with their DAO laws and Texas using their energy for Bitcoin mining.
So it's driving progress in a way.
Yeah, definitely. But it's not all sunshine and roses. You know, that volatility of crypto prices, that's a real risk, and states have to be careful not to just focus on crypto and forget about other industries and people who work in them.
Right. It needs to be sustainable, not just a quick boom and bust.
Absolutely.
Eh,
And it seems pretty likely that we will see some clear crypto capitals emerge. And those places are going to need to invest in education and job training to support those new economies.
Yeah, you need the workforce to make it all work.
For sure.
And we're already starting to see some of the early effects of all this, aren't we?
Oh, yeah. And those states that got in early, like Ohio, Texas, Florida, you see new jobs being created, tech hubs popping up. It really does feel like a modern-day gold rush.
It's exciting, but also a little nerve-wracking, I imagine.
Definitely. And alongside those new jobs, you see other industries growing too, like legal services,
Yeah.
cybersecurity, all that stuff. But states are also having to learn how to deal with budgets that include these volatile crypto assets.
Yeah.
They need some pretty sophisticated financial strategies to manage that.
Right, because if the price of Bitcoin tanks, suddenly that could leave a big hole in their budget.
Exactly. And one interesting side effect is that blockchain being so transparent, well, that's actually leading to more transparency in government finances in some places, which could be a good thing. More accountability, maybe more engagement from citizens.
Yeah, if people can see exactly where the money's going, that could be a good thing.
Right. But it also means that financial data is out there for everyone to see, which comes with its own risks.
Right, two sides to every coin, so to speak.
Yeah. And then it raises questions about the whole relationship between the states and the federal government. Could this lead to a more decentralized U.S. economy? Or will it push the feds to create some standard set of rules for everyone?
Yeah, that's a big question that's still playing out.
Totally.
Now, one final thing, it's clear that states aren't just content with owning Bitcoin. They want to be at the forefront of this whole blockchain revolution. They want to be the hubs, the centers of innovation.
Absolutely. They're going beyond just holding Bitcoin.
Hmm.
They want to build those comprehensive blockchain ecosystems. And we're seeing some really interesting examples. Miami creating a regulatory sandbox and using crypto in government.
Hmm.
Austin giving tax breaks for green crypto mining. Wyoming setting up the legal framework for DAOs.
So it's becoming a lot more than just we own some Bitcoin. It's about creating an environment where this whole technology can flourish.
Yeah, exactly. And that takes a lot of work.
Yeah.
They need the infrastructure. They need to attract the talent. And they have to be mindful of that potential for financial instability because those crypto markets can be really unpredictable.
So a lot of challenges, but also a lot of potential.
Yeah. And the long-term goal for many of these states is to be the birthplace of the next big thing in finance. Things like blockchain voting, decentralized finance, all that stuff. And who knows what other sectors blockchain might revolutionize. It's really just the beginning.
So the race is on, and it's going to be fascinating to see how it all plays out.
For sure.
All right, so to sum it all up, we're seeing this really significant and fast-moving trend of states getting involved with cryptocurrency, mainly Bitcoin, and they're doing it in all sorts of ways, from creating reserves to really integrating it into their economies.
And what's really interesting is how different their approaches and motivations are. It's a really dynamic and experimental space right now.
So hopefully this deep dive has given you a better grasp of what's going on and what it all means. And on that note, here's something to think about, given how quickly states are adopting crypto. What does that mean for the US dollar's role in the world, and how might it affect your own finances down the line?
Yeah, that's a big one to ponder.
It is, so we encourage you to check out those sources you sent us, dig in a little deeper, and we'll be back soon with another deep dive into another fascinating topic.
See you then.